Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome you. We got Ben Watson in the chat. We welcome him as well. We got Bob, Will, Elena, and BJ, and many others. We welcome to all of you here on this Monday, the start of kicking off the Thanksgiving Day week. So hopefully you're getting properly prepared for that. Let's talk about markets here. Now, just real quick as we're getting going, want to give us a quick reminder that with what we discussed here today, it's not for informational purposes only. And also remember, when we talk about examples, they're not recommendations, they're examples. Also remember, if we talk about options, remember options carry a high level of risk, not suitable for all investors. When we also talk about examples, they will be done in the Paper Money software application. And also when we talk about investing, realize to try to make something, okay, we need to consider what that risk is and where that risk is coming from. And so it involves investing, involves risk, including loss of principal or capital. Now, today, what I want to do is 2 weeks ago, I'll show this right here. So 2 weeks ago, we did this class, okay? And this class was, and make sure that you're kind of saving that link if you don't know. Now, this right here is going to give us, and let me kind of back off for just a moment. Let me kind of just show this playlist if I can. Pull that back up. That's going to get us to this webcast, okay? And this webcast right there, let me kind of put that back, make it big. There you go. So it's going to get us to this link. And so really, from 2 weeks ago, Ben Watson covered last week, and I appreciate that. I was sick, and I'm still working on it. But we finished with talking about 10 key technical setups. Now, this kind of picture was at the 45-minute mark, okay? What I want to do is I want to kind of make this an application of what we talked about. Of these, you can know about the 10. Doesn't mean we apply any of it. But today I want to kind of talk about the application and how do we do it, how do we find it, and kind of talking about these setups. Now, these setups we'll refer to, or we'll kind of quickly write them down again. But just remember, it's the link I sent to you, and it's at the 45-minute mark. Feel free to go back and watch that if you have not done so already. Now, just real quick, I also, before we get into that, I do want to take really a quick look at markets. That's going to kind of also play into what we discuss here today. And then what I want to do is I want to kind of talk about those examples of finding stocks that really have those setups. Okay, now, the first thing what I want to do is I want to kind of just write down what was kind of the three main points we showed before. Well, first off was talking about relative strength, okay? That relative strength is probably the foundation, well, it is the foundational concept. Relative strength in those over 5, 10, 21, 42, and 63 days, okay? If we find the relative strength, okay, where that currently is at the moment, this now leads into many other technical setups on the chart. Now, the second one, can anybody remind me what the second one was? It was just price above 10-day moving average, okay? Now, we could kind of think of this as maybe an early setup. Now, when we look at a number of charts, there was a ton of these where just the price was above the 10-day moving average, okay? So we call it's an early setup. It's not a crossover yet, maybe not a crossover, okay, yet, okay? Not a crossover yet. It's early. Now, when we talk about number 3, we're talking about where the price was or is, okay, above the 10, 30. It could be 10, 20. That's the one we've been using. But if you want to use 30, I'm fine with that. Moving average. So this is kind of more, you have more confirmation. Prices above the 10. Prices above the 20. Geez, spelling is horrible. More confirmation. If you're above the 10 and the 20, the price is, there's a really good likelihood the crossover, okay, has happened or happening. Happening or happened, okay? So what I want to do is I want to kind of talk about these three as we kick this off, and then we're going to kind of come into some of these others. So first off, what I want to do is let's kind of go ahead and just pull up just briefly. If we look at the indexes, okay, and we just pull up the market watch and we go right to, let's say, where it says indexes, okay? So if I pull up the indexes and we're looking to kind of see which ones are the stronger ones, we're looking at the 5, the 10, the 21, the 42, the 63. We'll do this with the Dow in just a moment. But if we looked at this and kind of said which one, now why is the SPX not giving us a read here? Well, it's the SPX compared to the SPX. Now, you could take the product that tracks the S&P 500, take the SPX out and type in SP, you fill in the blank, and that would give you a reading, okay? But if we're talking about the NASDAQ, we cannot say the NASDAQ's been the strongest. No. If we look at the Russell, that actually has kind of been of interest right there. Green, 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 green. And if we look at the Dow Jones, it's also been quite strong as well. So we at least have the Dow, we at least have the Russell. Those have really been where we've had pockets of strength. Get a quick visual of what these look like. Well, those visuals, if I pull this up, brand new high here today. Now, remember when we talked about on this chart, this piece of paper here, price above the 10-day moving average, early setup. Now, why do you want to get in early? Why do you want to get in? What's the purpose of trying to get in early? Does anybody know what the purpose is? Why does someone want to know how to do number 2 and be able to find it? Well, you're trying to get closer to the support. That's the whole purpose of it. You're trying to make, or trying to have, okay, higher potential reward to risk. Okay? Now, the con of that is you could be getting in early and there's not confirmation. But if you're wrong and you put the stop below that support area, you're probably not wrong by that much, but there is risk. Okay? Now, when we go back and look at this, this is an exact example of what I'm talking about. Number 2, on 11:20, the Dow starts turning up. And all of a sudden, on 11:21, we start turning up. I want to kind of emphasize something we said last week. You're probably going to see long, lower, okay, tails, okay? You're probably also going to see hammer candles. You're going to see probably bullish engulfing, okay? Piercing lines, okay? And you're probably going to see, let's say, price bounce up off 10-day moving average area. And we saw a ton of that. My gosh. You're going to see that kind of lower shadows, right? Kind of hammerish like candle. Then all of a sudden, look where the intraday low was, right at the 10, right? See, this is like where you want to kind of see the movie and then say, I've seen this before. And then all of a sudden, there kind of comes these big green candles. And then all of a sudden, you get these big green candles more, and you start to get the 20-period moving average to go green. Okay, there it is. And there's the cross. So what you're now kind of seeing is we saw this, and now that up move in price has now gone to this. Now, the one thing I want to kind of say about this is, if we get the price above the 10 and the 20 or 30, if you use that, looking for price to pull back less than 3 days. Okay? In other words, when I say pullback days, I'm talking about red candles that are 3 days or less, where price, okay, is still holding above moving average. And the moving average we're talking about in our case is that 20-day. You can use 30, okay? You can use 30, fine with that. So if we get the price above both moving averages, okay, we're looking where those red candles are 3 days or less, where the price is still above the moving average. Now, where do we come now? Well, if we start to see that condition, we're probably going to start to see a lot of holds and a lot of things that look like closed higher gap, okay, setups. These are bullish bounces, okay? Now, so first off, remember, if we can find the relative strength, it plays into seeing these four, seeing the three below, okay? Now, what I want to do is I want to kind of help you with this list, okay? So the list that we're talking about is we look at the Dow 30, and this is a daily routine. Okay, so let's kind of show this for just a moment. Okay, by the way, if you want to see the Russell, that's a brand new high. Okay, so a lot of us kind of wondered, could the Russell go up? Could it pull back? And then you're going to see the same thing, right? There's your kind of setup number 2, right? 10-day moving average goes green. You're going to see that the lower shadow was right near the 10-period moving average, nothing unusual. There's the gap up in the price. You get the price to go up more. There's the 20-period moving average going green. And if that's the case, there's the moving average crossover. Okay? Now, about right now, the investor says, geez, I wish I had more of a backbone to actually get in when that 10-period moving average went green. Does anybody feel like that? So here's the deal. I could show you any indicators you want, but the bottom line is it still comes down to, does the investor have the fortitude to trade that signal? Okay? And that's probably 80% of it. Do they have the fortitude to trade what they see? Okay? Now, if I go back to this, so we looked at the Dow, we also looked at the Russell. I want to now go to the Market Watch, and what I want to do is I want to go to the public list, and I want to go to the Dow Jones Industrial, okay, for just a moment. Now, I want to kind of take a step back for just a second, and then there's two things, okay? So number one is we really talked about, for example, this relative strength, okay? And this relative strength, and I want to be very crystal clear, okay? So this relative strength, we're looking at the Dow 30. This is a public, okay, public list. Okay, now the other part of that list is the NASDAQ, okay, 100. Now we've broken the list in half. I'm going to share this in just a moment, and I'll tell you why. The S&P 100 broken the list in half. Okay, now if you did Dow 30, NASDAQ 100, S&P 100, it's 230 total stocks. It really comes out to be 199 stocks total because some stocks are in other each list. So if we take out the stocks that are in the S&P that are also in the NASDAQ and vice versa, you really are looking at on a daily basis of about 199 stocks total. That's if you took them all. So if you just add up 30, 100, 100, get to 230. 31 stocks are duplicated in other lists. So the total list we're looking at is not 5,000 stocks. It's 199. That is the total universe for this class. Now, occasionally, we might bring up airline stocks that are in the S&P 500 or home builder stocks or casino stocks. But again, that's really not 80 to 90% of what we're talking about. That's a minority, okay? And when you bring up a minority, people then completely forget what are the majority of examples. The majority of examples come from this. We bring up airline stocks or home builders, that's not something that's going to, we're not deviating away from what we're normally doing just because of that, okay? Our brains are so flush with, things that we can comprehend. One or two examples outside the main point doesn't make us forget, right? Okay, now, what I want to do is I want to come back to this for just a second. So let me ask you a question. If I were to look for, let's say, stocks that had strong relative strength over multiple different time periods, which stocks would you say? Now, by the way, where do you find these columns? Well, if you go to right on my X page, I list all of them that we use in class, right at the very top of my X page. Be very careful. For some reason, there's some James Boyd wannabes that copy my page, okay? And what you're going to notice is right here, down at the very tippy top, you're going to see that it will give you these scripts. Any script that you want, like week percent, it's in blue. 1 month percent, it's in blue. Year to date percent, it's in blue. This is like a menu at a restaurant. You tell me what you want, order it, and you're going to see that those scripts, they're not guaranteed for accuracy or time, but it's a great way to try to screen the market, okay? Now, what I want to do, now, by the way, the scripts are really used for maybe potential future positions like what we're talking about now, but also it's a way to kind of track existing positions. Now, let me go back to this. I just want to show you that's where I got the headings. I went to the menu right on my X page and said, I want the RS5. I found the RS5, went over to the right-hand side and literally just typed that in at the very top right of the platform, set up, open shared item, and I typed it in, RS5, and it put the label right there. I want the RS10. Go back to the menu, find that row, go over to the right, look in blue, type it in, okay? And so you get to pick what you want on your investing plate. This is what I want, okay? Now, if I were to ask you, like, hey, what stocks have actually been quite strong from a relative strength perspective? Well, American Express has really been at the top. It's been green, 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 okay? Now, if you look at also Cisco, it's been quite strong. You're going to see in the last 2 weeks, Boeing's coming back, and you're also going to see a little, kitty cat, okay? Now, when I say kitty cat, you're seeing that on a stock like Caterpillar, that's one that was neutral, hence great color, but in the last 2 weeks, it's been turning quite strong. Now, stocks like PG have been strong for about the 4 out of the last 5, and also the Home Depot, okay, has also been quite strong as well. So finding stocks, okay, so if someone asked me, hey, James, do you run stocks searches daily? No, I don't, okay? I use scripts as a way to search. I don't run searches. Now, you can do what you want, but this is the way I like to find them, okay? Now, what I want to do is I want to go back to just real quick, one that was brought up last week. You guys and gals ask about John Deere, the big green machine. Well, it shot up again. Now, we kind of mentioned that, for example, if John Deere went to the upside, agricultural machinery or machinery in general, what other machinery is there? Well, we kind of wondered, could Caterpillar get a little bullish momentum as well? Now, Caterpillar gapped up on Friday, and then it gapped up again, and today is really the low. Today's open price is the low. Now, it ain't up as much as, let's say, John Deere, but it's not that bad. We go back to the daily, 3-year weekly chart. This is what we're showing. Now, I want to kind of mention something for just a quick second. What you're now going to see, if we went back to the concept of the moving averages, right, is the 10-week moving average green. Yes. Is the 20-week moving average green? Yes. Okay, it still is. Now, what I'm going to do here is we're going to go back and kind of look at this and kind of say, look, it's shot up 1, 2, 3 days. And maybe, for example, if someone was trying to do a buy limit order, they might try to do this right at the middle, about 402. Now, Jim also says Ingersoll Rand. Okay, we can include that as well. We'll try, give me a ticker on that. Can't remember the ticker on that one. But if we also look at this, we could do a buy limit at 402. Let's show that. Okay, let me pull up the paper money account. Now, here's the deal. Remember, we can know what the signals are. We can know what the indicators are. But at the end of the day, we still got to come back and have the fortitude to trade it. I mean, I can tell you Bitcoin's up to 100,000. Doesn't mean a darn thing if I just sat there and watched it go straight up, right? All right, so here it is. So let's show the example here that if Caterpillar went to the middle of the candle, we're going to do this in one of two ways, okay? We're going to do it with by custom with OCO bracket. Now, what I'm going to do, just for time's sake, okay, because I want to kind of talk about these other practice ones. If I use, let's say, $5,000, okay, and said, look, we're going to buy $5,000 worth of stock. We're going to try to buy at the middle of the candle. Now, why are you not buying it, let's say, if it goes above today's high? Well, we're trying to catch it on a little bit of a pullback on purpose after it's already gone up about 30 or so points or 8 or 9%. So we're only thinking, could it fall down just $3 lousy and try to get the paper money account in? Now, the prior high, if we go back and really look at this, that prior high is 419. Now, for some investors, they might think, well, that's not enough. I need more than that. This also might kind of be setting up a channel, which we're going to come back to on ALB in just a moment. But if you kind of look at this, we could say, look, 375, maybe the bottom end. And then maybe if we look at this and say, look, 418, could it be setting up maybe a new channel? If we look at that, we might kind of say, look, width of that, or even if we took kind of a smaller measurement, I like to do that as well, just to be fair? Well, if we took a smaller measurement to try to have a greater chance of it hitting that, okay, greater chance doesn't mean actual, it would give us 425, okay? 425 on top of 400, where we have more touches of resistance, that'll be 400 plus 25, be 425 target. We're going to put that target right here. Now, I'm going to tell you what sometimes happens. You get in, it goes to the target, and the dadgum stock shoots right past the target, and then you're sick that you set a target. We know how you feel. Sometimes that can happen, okay? Now, what I'm going to do is I'm going to set the stop underneath the 10-period moving average. We're going to go back 390, 98 less 2%, and now what you're going to see is 383.16, okay? 383.16. Now, if we went back to kind of like what we're talking about in terms of these 10 setups, what type of setups have we been getting as of lately? Well, you got Kohol dots on the chart. That was early. That was the 10 period. That was number 3 setup. Number 4 setup, excuse me, number 2 setup was that day and that day. Number 3 setup was right here, okay? And if you said, well, James, I also saw, let's say, a gap entry, that was really example number 4. So here's kind of the funny thing about indicators. If you get a strong upside move, you could get multiple indicators flashing at the same time. Sure, okay? Just like if the things went to the downside, you can get multiple indicators showing the same thing as well, okay? Now what I'm gonna do is let's kind of go back, let's put this in, confirm and send. Now note this, it says this order is based upon a dollar amount, and then with the stop, there's no guarantee the execution amount will be at or near the activation price. Send the order. Now, and I'll fix that. But now when we actually go back to something, I want to kind of take a look at, let's say, this 5th one, right? The 5th one, we're actually talking about stocks, okay? Stock. Now, by the way, this will be stocks that are at highs. It's in a continuation pattern, okay? Continuation pattern. We could also say kind of with this is these are stocks that could be breaking out BO, I'll just label it horizontal, okay, or diagonal breakout, okay? Now, I also want to kind of just talk about this one just real quick, and this is going to be the ALB example. Now, by the way, you might be thinking, well, why is he retyping it? Why doesn't he just show the previous? I can't teach off that. I have to recreate it as I'm going, okay? There you go. Now, what I'm going to do is let's kind of go back to something ALB. Now, one of the stocks, I should say this, one of the areas that's actually done quite strong, okay, that's had a pretty good bounce back is basic materials. The last couple days, does anybody know what pattern that we saw on the base material sector? Now, it went down aggressively, right? Went down, went up just a hair, and then went down, and then came back up. Now, that area right there, you could really say is like a shorter term lower high. True. You could also say that, James, we went down pretty aggressively, okay? But we've also gone up almost, in terms of time frame, it's almost turned into like a V pattern. Now, that V pattern was setup number 10. So remember what we kind of said is if you actually fall down below a support level, and then all of a sudden it ricochets or slingshots back to the upside as fast as it went down, but to the upside, the chances that it could go higher are pretty dang high. Now, I'll just kind of say this without leading the witness here. Another stock that's doing that right now is PG. I mean, guys, gals, you should be able to see this. I mean, on the right-hand side, if you see something crashing to the upside, okay, and by the way, if you look at how long this took to go down, and then how fast it came back to the upside, and how many green candles in a row were there, okay? Classic example of a V pattern, okay? When this support broke, okay, yes, it stayed down there for a couple days, but when it got back above, bulls stampeded to the upside. Again, a lot of people don't look at those V patterns. How did I figure out the V patterns? Easy. I was short. I was short stock. I was bearish the trade. And I would see these where they broke support. I felt so good about it, only to see the stock crash back to the upside. And I noticed, I was like, man, when it does that, it just seems to completely reverse. That would be such an awesome trade if I was bullish, but I was bearish. And so I learned from failure. And that failure actually kind of became an interesting bullish setup. Okay. Now, what I'm going to do is let's go back to just real quick ALB for just a moment. Now, if you look at ALB, this kind of has a pretty interesting, setup to it. It's kind of taken some time to kind of come up through the 110-ish level. But let's say the investor said, James, I'm thinking that maybe this stock might try to go to the upside. I'm not really sure if I want to outlay the capital to, let's say, buy the shares of the stock. Could I maybe just, let's say, buy a long call and see if the stock could go to the upside? Okay, now, if you buy a long call, you're really saying, look, I might be willing to risk all of it. Okay, now, for the time's sake, what we're going to do is we're going to go look at, let's say, which options are kind of more at the money. Well, if we look at, let's say, the stock price is at 109 3/4 currently, and the strike that we have is the 110. Now, why am I picking this one? Well, we're trying to pick the one that really has the most open interest, which is the at the money strike. Now, the dangerous thing about buying calls, you could lose all of it. That's number one. The second part of it is there's time decay. The only thing that can offset that is volatility goes up, but that's pretty unlikely if you don't have earnings coming up, and it's pretty unlikely to have volatility rising if the stock is going up. If the volatility goes up, it typically means the stock is going down, which wouldn't be good for a long call trade. So we're going to click on that 110 call. Now we're going to single. Now we have shares already, so I'm adding to the position. Okay. And so this is giving us the right to buy the shares at 110. Okay. So when we go back to this and said, hey, where does this really fit on kind of the 10 setups? Channels. I want you to be able to find 3 setups for channels. Now you might be thinking to yourself, well, I don't know how to find them. If that's how you feel. That's not true. Okay. You would really be looking for stocks that are breaching 20-day highs, okay? You'd probably be looking for stocks that are hitting 20-day highs. Why not 50-day highs? If you look for stocks that are hitting 50-day highs, you're probably you could, but you're trying to catch some that are fresh, recent, okay? So that you're probably looking for the 20-day highs first. Now, how do I know if it's a channel? Well, if it's something that's gone down over time and then hit a 20-day high, there's a significant likelihood, okay, that it could be a channel, okay, because you had price that fell down and then it starts to come back up. And as it comes back up, there could be multiple levels of resistance of where it fell down from. So you might even look for something that maybe over the last 3 to 6 months has fallen down. Might be a little harder if you're in a bullish market, but still not impossible. Many stocks still went down even on the bullish market. Now, what I'm going to do is going to buy that long call. Now, remember on this, we're going to push the price to mid 525, confirm, send. Now, we have the right to buy the shares from now until expiration. That right to buy those shares is not free. It's $525. And that gives us the right to buy the shares at 110. All of that option is extrinsic value. It's all time. There's no intrinsic value. There's no equity here. Okay, we're at the money. And if you take a look at the break even, we would need this stock in the next 25 days to go to this price just to break even pre-commission. The stock gets to that price sooner than later and above that. Now we could start to make some profits. But that is the break-even expiration. Don't forget that. For the one contract, 65 cents. Now what we're going to do is going to go ahead and say send that order. Now what I want to do here in this case is I want to go back to something. So if someone said, James, I don't really look at the Dow on a daily basis. That's shocking. Absolutely shocking. So if these companies cannot win based upon their balance sheets, they're billion-dollar companies. They have a lot of volume, okay? A lot of recognition. They sell domestically, but also abroad. They have scale, meaning they're not just in Austin, Texas, and that's it. They're all over the place. So if these companies can't be in a position to win, you got to ask the question, who would win then? Okay? Now, what I want to do is, if we look at this list, if you said, well, James, I am focusing on right now, I'm looking for Caholds, okay? Well, if we said, what should I ask to Cahold? American Express, Caterpillar, PG does, Home Depot does, right? This is where it like becomes a search. Now remember, script's not guaranteed for accuracy. You want to verify this on the chart. And you're going to see also right here, I'm going to go back to one other example, IBM, which is also showing a Cahold, okay? And you're also going to see the other one that was recently added to the Dow, SHW. Now let's bring up these two right here, IBM and SHW. Now, if you look at SHW, what's kind of interesting on that one, it is hitting a 20-day high, green background. It is hitting a 55-day high, green background. Now, what's interesting about this is you're going to also see that it is X with a green background. What does that mean? Well, it really means that it's a crossover potentially today. Now, also, when you go back and kind of talk about the timing of the entry, it's a green background. 2 represents, in this case, that it crossed over 2 days ago to a green color, the moving average did. And the 20-period moving average, that turned green today. So I'm just going to say it like this. I don't really know how we're going to, how would we be late if we have tools like this, okay? I'm going to tell you how we're going to be late. If you're looking at all these different lists on a day-to-day basis, it's completely breaking down your routine, okay? Completely breaking down your routine. We're trying to look at less list. Of the list that we have, 199 stocks total, if we can't find examples out of those, there's a pretty good chance there ain't too many examples that are bullish, okay? I think a lot of times people might do better if they look at less list than more. Okay, now let me kind of show these just real quick. But if I were to, let's say, look at Caterpillar, okay, go back to what I want to do is I want to go back to that IBM, and I'm going to look at this. Now, what does kind of IBM show here that's kind of a little unusual to it? What do we see? Now, on the 5th setup we talked about, breakouts, horizontal or diagonal. Well, we could kind of say on this chart, you kind of had a gap down from that price, okay, at the close, and it gapped all the way down to there. Would you still call this gapping down? Where it gapped down. Could you also still call it a breakout? Could you still call this a channel? Sure. Okay, absolutely. Now, what you're going to notice is it pokes its head above that line, the 220-ish. Notice where it went exactly down to. Oh, just randomly. Right back down to the gap down spot. Now, I'm starting to wonder if these institutional investors actually have that list. Joking with you, of course. Okay. Maybe not. Okay, here we go. Now, notice what we see is the very next day, what do we see? Well, we see a strong bullish candle where it gaps up. The open and the intraday low is almost the same, almost, and then it's trying to ram higher. Not a hold yet, but we actually see it's trying to fill in the gap. We absolutely would still call this a channel. Speaking of that, we're going to go into the trade tab. Now, the one thing that we got to say is on IBM, IBM does not really have, okay, when we talk about volatility, it doesn't have a ton of volatility. The IV is only 20. So like on the previous example, for time's sake, we're just going to say, look, instead of buying the shares and try to be more capital efficient, we're going to try to go buy the at-the-money call, the 225, 3,800 contracts total, okay, open on exercise, and we're going to left-click on that 520. Now notice it, we're going to push it down a nickel, okay? The bid-ask spread, 510 by 520. We're trying to get somewhere in the middle, okay? You look at the break even, what you're now going to see is buy the 225 for 515, okay? Now when we do that, if we have a right to buy at 225 and we pay 515 for it, the break even at expiration is 230.15, okay? There's the commission. Now what we're going to go ahead and do is send the order. Now just like we did on the previous idea is that, hey, if it went up to, let's say, 230, could that be a short-term price target? Sure. Could we also set a higher price target, let's say 235? Sure. Okay? Now let me kind of say a statement to you. It doesn't really matter how long you've been in the market. What really matters is you understand fundamental principles and practices, and how good are you in terms of executing what you see. That's the difference maker. That's totally the difference. If you understand these 10 setups we're talking about and you can execute them, okay, and it's fine if you said, James, I'm doing paper, but I'm executing the timeliness I'm focusing on, then you're probably farther along than many people that have been doing this for 20 years that are still kind of kicking the tires around and not really doing as many trades. There's no substitute for doing practice trades. None. You're not going to get good at it without doing a lot of practice trades. Okay. Now, what I'm going to do is I want to go back to something for just a moment, and we're going to go look at that SHW. Now, when we look at the SHW, you're going to see that it looks like this. Now, let's kind of go back to this list. Okay. So first off, we kind of talked about stocks at highs, continuation patterns, maybe stocks that are horizontal or diagonal breakouts. Now, we put a time frame on that, 20 to 55 days. Okay. 20 to 55 days. Now, if you take a look at the number 7, we called it bull flags. We talked really number 8. We really talked about stocks breaking support and rapidly, okay, firing back higher. Talked about that. 9 was V patterns, okay, V patterns, which I showed you those two, and W patterns. And we saw quite a few of those last week, and actually literally V patterns. So in other words, most everything, like we could talk about strategy, okay? Like what option strategy or whatever. I don't care if we're talking about stocks or we're doing options. Pretty much, I would say if someone said, James, I'm going to focus on these 10 setups, and it's going to be like 85 to 90% of what you really focus on, and you just hammer this and hammer this and hammer this and hammer this over and over and over and over again, all of a sudden your confidence increases, you get comfortable, kind of get into a little routine, and all of a sudden you're like, dude, I'm kind of scared of myself. I kind of know what I'm doing now, okay? I think knowing more is not necessarily always better, because if you can't practice what you already learned, then you feel like you're stretching, and then you kind of don't really have a rhythm of what you're doing, okay? So I want you to kind of focus on these 10, not 1, 10, and say which 2 or 3 are your specialty. Now, by the way, these 1 to 10 can happen in different trends, and that's why there's kind of some options there. We talked about that last week. Now, let's go back to the SHW for just a moment. When you look at the SHW, kind of really looks like a horizontal. Now, we could even argue, which I like to, that this kind of looks like a tilted up W pattern. And I wouldn't argue with you. I would agree with you. I'd say, I think you're right. And you could even say, James, I'm kind of seeing maybe an inverse head and shoulder. And I wouldn't even argue with you. Okay? So if we look at this, we could say that. It just kind of depends on what time frame. Okay? Shoulder, head, shoulder. On the right-hand side, you really got a tilted up W pattern with a brand new breakout here today. Now, what we're going to do, now remember, some investors can be like, well, I talked to some guy and he was talking about using whatever indicator, whatever it is. Look, it's not what the indicator is. You can pull up Awesome Indicator, Rune Indicator, MACD, Stochastics, RSI, CCI, ADI. You can pull up any of them. They're pretty much all going to be showing you the same blasted thing. Okay? And that's what kind of people need to understand, is that different people try to make different indicators, but when you all stack them up on top of each other, they're almost all the same. So sometimes we're so focused on seeing the reflection and not just looking actually in the mirror. Okay? Looking at the actual mirror is looking at the price action. And the price action is showing a breakout. We're not getting caught up in reflections, okay? We're looking at the price itself. It's like, geez, that's a breakout. Now, when you look at this, we might say, well, could it pull back a little bit? Maybe. We might actually do something at 395, and we're going to do this. We'll do a paper trade on that. We're going to go back to SHW. Now, if we look at that, SHW, one thing we're going to kind of do is going to kind of measure just briefly from the bottom to the top. Now, if we take a look at this, this is probably another example where the investor says, James, the next time I see lower shadows, I'm not going to just sit there and watch it. Some of you said I see lower shadow again. I see the 10-period moving average going green. It then goes above the 20 and then shows more confirmation. The 20 goes green. And then if it stays up above, the crossover happens. And it's like watching a movie all over again. Now, so we can't go back in time. But if you don't know what that first early setup looks like, you don't realize how you could be getting a setup that you might want that might be showing more confirmation. Now, what we're going to do is we're going to do this in one of two ways. We're going to right-click on the chart, right at the middle of the green candle. We're going to put Buy Custom with OCO Bracket. Now, what we're going to do in this case is we're going to go to the pool balls, percent, dollar amount. Let's say we did $5,000, okay? We did $5,000, this example given. It's going to be a 395.26 dated GTC. Now, we're going to put a target there in just a moment. Where would you put that target yourself? And if we put a stop underneath, we might say, James, I'm going to put a stop right underneath today's intraday low, 389.64, less 2%, and it's 381.84. If we put that right there, 381.84, stop GTC. Now, when we go back and really look at this, James, could this also be another channel? Not going to argue with you, okay? And I think we could even have a fun discussion. We could say, James, I have a channel from 368 to maybe 391. That's going to give us, how much is that? 391, 368. It's about a $23 channel. $23 channel on top of 391. That give a 414 price target. If we actually said, James, I'm taking it from the widest point from there to there, it'd be $33 on top, $33 on top of 391. It'd give us a 424 price target. And if you said, James, I don't know which one to take, maybe you just go for it in the middle, okay? 419. Now, here's what I want you to do. If I ran into you in the airport, let's say 5 years from now, I would love nothing more to say, James, I have this list of 10, and I have practiced this so many times, I could teach you something about it, and I would absolutely I'd sit down and say, teach me, brother or sister, okay? So if we go back to this, we could say, kind of looks like it's a channel, but we could also say that with this, we could say it's kind of like 5 and 6. Now remember, if you get something going to the upside, can you get multiple setups at the same time? Sure, if it's a strong move to the upside. Strong move to the upside would be like a bullish engulfing, a hold candle, and so on, okay? Now what I'm going to do is on this, buying the shares of the stock, we got also a target. We're going to put it right at 419 in between the two measurements, and we're going to go confirm and send. And now what we see is we're going to send that, okay? I'm going to put it right there. Read what's in red. Now, what I'm going to do in kind of closing here, and I'll fix that, is I want to make sure that you have the list for the NASDAQ. And some of you might not have this, and I'm going to send this out. Let me just kind of do, so this right here, if you like NASDAQ stocks, this is taking the NASDAQ 100 and slicing it in half. And I want to send this to you so that way you can actually put this in yours. Now, this is not James' personal watch list. This is just the NASDAQ 100 that's in half. Why is it in half? Well, it's so the scripts can load, okay? So the first one is the NASDAQ 100 list number 1, okay? Now, if we are just really good, we could say, James, you wouldn't happen to have that S&P 100 list number 1 and 2 like the NASDAQ? Maybe. And what this is going to do, we put that third one right there is for the S&P 100 list number 1. By the way, lots of green. If you hate green, probably don't want to look at that list. And then if you look at that right there, what you're going to see is if we go to share that one. So if you don't have these lists that I sent you, you don't have to type them in. I broke them up for us, and then you could just kind of input those. And you're going to notice how we did this. It says NASDAQ 100, number 1. It's 50 stocks of the 100. NASDAQ 100, number 2. The last 50 stocks of the 100. The purpose of that is so you can have the scripts load efficiently. And also it's easier to screen 50 of them than it is 100 of them. Your assignment is to go out and practice looking for these 10 setups. I shared with you the list, okay, the Dow you have. I shared with you also the list of the NASDAQ and of the S&P. Your homework is to make sure that you put that on your platform, those 4 links there, and I will also put those in the description of this webcast. So I'm out of my time here today. That's what I want to share and make sure that we got practice of. Now, with that said, go out and do your homework, okay? Biggest, hardest thing for you is to copy and paste, which is really that bad, but it's something for you to practice and then find those examples. Now, also, I want to thank Ben, and thanks to all of you. Stay tuned for Michael Fairborn coming up next. And this has been the class on trading with technical indicators, really highlighting and practicing what we talked about 2 weeks ago. Stay tuned for Michael Fairborn coming up next. Take care. Bye-bye.